All right, you are welcome back once again. So we have talked about the terminologies and the basis yesterday. And today we are still going to continue with the basis. And then equally at the same time, we are going to look at the first thing we're going to talk about this morning, strength. Now, this is the problem I'm going to have here right now because of this write-up. So before the problem become a problem for me, I think I'm going to change the particular screen. I will share another screen right now in a minute. But we are going to look at trend. We talked about consolidation yesterday, you can remember. And then today we want to talk about consolidation, right?
Yes, we did.
What we say consolidation means the market is stagnant, it's not going anywhere.
Stagnant, yes, friction.
Just in a particular place. So we're going to look at them in terms of examples, and then we will talk about trend too. Talk about trend, and then we'll look at some examples of the consolidations, some example of the trend. And then possibly if time permits us, we will talk about risk management. People do make that to be the last, but we make it to be the first. Now, this particular one, let me come here. So, yesterday we talked about currency pairs, which I believe you may have. I will remove all the drawings here. Okay, yes, remove. Some of them, you see, I love them. I remove all of them. So now, this morning, yesterday we talked about consolidation. And today we're going to talk about trend. So when we say something is trendy, what is trend news? Trend news means that everybody have heard about it or is moving, right? That's the meaning of trend. Something is trending, it means it's going viral, it's moving. So trend is opposite of consolidation. When we say something is consolidation, meaning that it's not going anywhere. Or when we say something is trending, it means that it's moving. So now, what is the example of trend and what example of consolidation? Remember what you're seeing on your screen, it's called candlestick. That's what I was telling you yesterday. If we don't want candlestick, as I told you, you see there's a lot of other things. You can see them, line, bar chart. I told you about all of these things yesterday. But our major thing we're going to be using is what? It's candlestick. What we're going to be using is candlestick. We are focusing on candlestick. We doesn't want to bore ourselves with all of this stuff. So you see bar chart, we talked about yesterday, all of it. So what we're going to be concentrating is candlestick. So this candlestick, as I told you, this color, it was me that set it. When I right click here and I go to settings, you'll be able to see all of these stuff here. It's me who put it, not that the thing come on their own. No. I was the one that put them here. Was the one that changed the color like this. So when I turn it like this, I come to settings, I can be able to change it, whether it's on your phone. See symbols. So body, border, wick. We talked about all of these things yesterday. So we're going to look at the examples of all of them today. One we can't be able to, and the one we cannot be able to. So trend means the market is moving. You see here it was moving, right? It was red, 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 green, red, red, green, red, green, red, but it was still going in a direction. Compared to what you see is happening here. Now, this has spent hours here. This has spent hours here. You see it? That's consolidation. This is around 7 a.m. in the morning. And what time is this? This is 9:30. Nothing has really moved. Even though I buy here, I buy somewhere around here, make like 20 pips. Now you see here, you can be able to easily measure all of those stuff as I was telling you. 20 pips. You weren't even 21 pips, but at 20 pips. But you see the market, this is not a market that is advisable to trade. See what is doing here? It's just in this place. That's consolidation. The market is only moving between these two prices, between these two places. Can even say it from here, but let's just going to be justifiable. From here to here, throughout this morning. But that simply means if I've been standing, if I've been awake from 7 a.m., 8, 9, almost 10 now, nothing has happened. But see what happened here, opposite here. Around 2 a.m. this morning, 2:45 a.m., to which time? To 6 a.m. this morning, this market moved how many pips? Wait and see. It moved about 70 pips. So from 2, 3, 4, 5, 6, 3 hours, it have moved 70 pips. But then now see the same hours here, from 7 to almost this is 9 to 10 now, this, which is the same 3 hours. It has not moved up to half of this particular. So that is the difference between what a trend market and then a consolidated market, or consolidation, as we call it yesterday. This is called consolidation. Consolidation market condition. Trending, and then I have trending, and then I did this one to be trending. I have it now, trending market condition. So that is the difference between what a consolidating market and then a market that is moving in trend. So you avoid anything that is consolidating and then you take what is moving in trend. These are terminologies of the market. We have not started looking at the market. We talked about candlestick yesterday. You are seeing the candlestick. We're going to talk about the candlestick too, because we were talking about the body, the open, the close of the candle yesterday, which we say when we come to the live practical demonstration of it, you will be able to see it. And that's exactly what you're saying. You will see what you have seen what the market is doing now. You see, it is moving with time, being the primary driver of the market, backed by the price changes as the times continue to evolve. So that is trending market, and that is consolidation market. Now, to continue with the times and to continue with the terminologies or terms of the market, we still have other things called, like you even remind me, I even forgot this one, so I don't know. Like, we still have some things like stop loss. It's called SL. You can shortcut it like that. What is your SL? What does it mean to be called stop loss? Stop loss is a defined risk before entry. It's a defined risk that when price, I said, based on my analysis, based on my prediction, that this market is going to so-so price. But if it will not go to that so-so price, please, when it begins to come back to so-so place, take me out. For example, I have $100. I want to make $10. But if I lose $2 in the process of making $10, I'm not more interested in that trade. That trade means that it's not valid anymore for me. So I'm not going to take that position any longer. So here now is the major thing that cut you off from hope that can become hopeless, or from anticipation that can be long, endure for life while in pain and in tears. So you have a defined risk called what? Stop loss. Then there's another one we call take profit. Take profit. We call it TP. Yes. So what's your TP? I say, what's your target? I want to make $10. So in the market, there is a way based on your stop loss and based on the pips, you will know when it's $10. You know when it's minus $10 in your account. You know when it's plus $20 in your account. So you predetermine these things before you start. It will be in figure of the number changing in price But for any price that leaves another level, like you see them here, from this price to this price, there is a difference between the two of them. And we see the difference between the change in those two prices called what? Pips. So when you are buying, your stop loss will always be below the price. Why? Because one price rise above entry. And then we have another one, entry. Yes, entry. So it's going to be like this, entry. You have entry in between. This is entry. Entry price. So you have your entry price. For example, this is your stop loss. This is your entry price. This is your take profit. That's if you are selling and you are expecting the market to do like this, to come to your target. So let's just say this is your target. This is your target. Or this is your target. This is your entry. This is your stop loss. For what? For a sell position. Sell position. Are you with me? So that is how this market is being predetermined by any serious trader. You are in a sell position. So for you to make money here or to lose money here, it is a thing of a will. It is a thing of, I know this will happen. Or you ignore it, or we were talking about low yesterday. If you break the law, you will be broken. If you break the law, they will break you. If you respect the law will respect you. So you see how people blow away their account by will, not by force. Why? Because the market gives you, this market will be here even when we are gone, because it had been here before we came. So you won't make the whole money in a day, and you won't lose the whole money in a day if you know what you're doing. When you have this in mind, why you came, the market was here. This is what the market is doing. And a wise trader will even just close his laptop and go and do other things because this is bullshit. This is bullshit. So those are some of the things you have to take note of. Number one, you have to have your entry, which is if it is in a sell position. If it is a buy position, vice versa, you reverse it. Your stop loss will be below. Let's just say this is where you enter. This is your entry. This is your stop loss. This is your target. Go here. And then this is buy position. Because you expect market to what? You expect market to go higher, buy position. And so forth and so on. So that is how this market moves, or is being algorithmically delivered. As my mentor will always say, he doesn't believe in the buy and sell pressure. You see what this market is doing here? Whether it's buy or sell pressure, that's none of my business. My business is how can I make money? And that should equally be your business and your concern. So that is exactly how these particular things move, or price move. Another key thing we have to look at right now today, equally at the same time, is time of the market. Time and section of the market. I told you yesterday categorically that we have three markets. We have three markets. This market number one, which currently now, we are in London markets. London market. And then we have New York market coming in the afternoon. New York. New York market. And then we'll have Asian market later in the night. So the market does not just move. No. The market, as I told you, the most number one thing that drives the market moving is time. Time before price. The market is moved based on time of the day. Nigeria and UK have the same time. That's why you see that the market is expected to move, but it did not move today. What happened? There's a very key website that we pay attention to every day called Forex Factory. Forex Factory. Very key website. What is the website used for? Website is used for calendar or Forex calendar, Forex Factory. Forex Factory news. This website gives us the calendar, the news event that drive the market. So when you come here now, I'm trying to gather things for you so that you should be able to understand that this requires some levels of work. It's not something somebody just sit down in his house and money begin to fall. No, you definitely have to put in the work here and before the money comes. So you see, this is Forex Factory. All these yellow ones, we do not regard them because they are minimum or low impact expected news. And then the rate is high impact news. Sometimes we look at this, but that's not even something that impacts the market, non-economic. Then you see this particular one, medium impact news. I don't know this color, whether it's, you people call it gold or gray gold. But then these are the two particular things we pay attention to. When we see rate envelope, we know that that's what you see, inflation expectation. And today is 12, so we have to check 12. We discovered that today, by which it has already happened, 8 a.m., there's climate count change. Climate, or is it climate change? So what is it? High impact expected. This were the figure. You can study this website at your own time. But always be curious and always be very attentive, especially there is news that I'm going to tell you to pay serious attention to, because they're the one that affect the market very well. And you can see them here. It's called FMOC, Member Speaks. This is very powerful news, but even though today is not that high impact or medium, it's low impact. And then we have PPI. It's a very well high impact news. And you see the PPI will come around. That's Wednesday, not even today, on JPP, JPY. So what makes JPP, Euro JPY not moving today? We don't really know. Zero economic sentiment. But remember again that this does not mean that the market does not move. The market has moved. Were you seeing my screen of the news? You do not see it, right? The Forex Factory. Ella, do you see it?
Yes, I did. I saw it.
Okay, you saw this one?
The one you were showing the time. Is that not the one?
I mean, right now,
Where
are
you
you
said
seeing chart or you are seeing a different thing?
No, I'm currently seeing the calendar, Forex Factory calendar.
Good and fine. That's good. That's what I mean. So now you see that this particular, but right now, if I come here, you're seeing the chart, right?
Yes, I am.
Good and fine. So all what I'm trying to explain to you here is that this particular website is very important. Very, very important. Every week or every day, you definitely have to take note of the news that they are coming up. You can read about the news, but we doesn't even give a fuck about this news. That's another thing we want you to understand. But on a day like this particular news, we pay attention to them. And sometimes if the news is coming at about, for example, Let's just say the news is coming by 10:30. We avoid anything around that time. So we have FOMC, we have PPI, we have non-farm payroll, which is very, very important one. This is the one that we fear most, this particular one. Why every first Friday of the month is being released as data. You know, Nigeria is a third world country. So US give us data of what they are doing in their country, and it affects the market. We're not being sentimental here, because you can trade based on sentiment and you keep maybe losing money, because we have this particular Forex factory is what we call fundamental trading. When you want to fundamentally understand what is happening, you then now go to the Forex calendar and see. Why are we talking? Because that is the time that the market can be manipulated. So it's advisable that we do stay away during those times for at least 15 minutes after the news has been released. Then we can come back and look at what the market is doing. So most of the time when those news are being released, we stay away from the market. You're not already in a position and you have secured part of your money and you are just waiting to see what will happen. Whatever happens will not hurt you that much. Then you can be able to let the position go. But else, if you are not yet, trading news is not the best way to make money. You can make money, and in a day, you can still lose the whole of the account. So it advisably you stay away from, especially these three: FOMC, PPI, non-farm payroll, because they can be very aggressive. It can move 1,000 pips, especially for some of the stocks I trade. In Forex, it can move up to even 100 pips in less than 1 minute. So there's no magic around it. If you are in that direction, congratulations. If you are not there, so you may not respect sometimes stop loss or take profit, because it moves aggressively looking for who to devour. And today I want to pass it on to you as a very sensitive information that the market doesn't give a fuck about anybody. Their aim and the aim of the market is to sweep liquidity, and the liquidity means human being money. So their aim is to make sure that a lot of people are poor, and then the government keep on being in control. When you have money, you know that you have options. You may decide to leave Nigeria today. Nobody will question you. If you go to the visa embassy, they will even tell you, they will attend to you in a short way that you think whether other people are not human. So you can go anywhere you want to live at your own terms and conditions. You can go to a country and negotiate with the country that you want to be the chief, whatever there. They will still be able to grant it to you. So that is what the power of money. So they are trying to see how they subdue people. But when you know what you're doing, you subdue them or you follow them. You can't beat them, but you follow them. And begin to take portion of your own. And those who do not know what they're doing, they collect their own portion. So that means this trade idea based on 5 minutes would have still been valid up to now. Yeah, but I think we're not more there. It's still been valid up to now. It's still valid up to now. That was early this morning. We entered somewhere around here. This was the first entry. This one happened to be the second time. And you see what the market is doing. So impressive. Even in the high resistant market condition. That's what I'm trying to say. Because this is high resistance market. It's just moving up and down, up and down. But right now, it's trying to break away from the consolidation. And you see this is happening right there, right now. So those are some of the things you have to pay attention to. The news is very important, but in order to be at the safer side, is just to know the time and the date that this news has been released. Anytime you see a red folder and that's the currency pair you're trading, or anything that have to do with US and UC, because it affects other markets, then you can be able to mellow down. 30 minutes, 1 hour will not change the game. You can trade other markets. So we're talking about London market. So when you wake up in the morning, because right now, US time has changed. It was -4. Right now it's -5. which is the New York time base we have been using to trade. My own Forex, what's it called? Trading view is set up in US time. Why? Because New York is the central processing unit of this particular market. So whatever I discover in the New York market, because New York market is the closing of the day for the 24 hours trading day. So where do we start? As a Nigerian, when you wake up in the morning from around 6 a.m. Nigeria time, which is 12 midnight New York time, it is the opening of the London market, which we call it European market. Please take attention. This market starts from which time, as I said? This market starts from 6 a.m. Nigeria time, 6 a.m. Nigeria time to around 4 p.m. Nigeria time. This market then now starts from earlier before it was 7 a.m., which is 12, but now it's 1 p.m. Nigeria time, and it lasts to about 10 p 11 p.m. 11 p.m. Nigeria time. Because it's a 24 hours market, as I said, and this particular market starts from the 11 p.m. Nigeria time, and it runs through to 5 a.m. Nigeria time. So if you check it, all of them are around 8 hours, 24 hours for the whole of them. That's what we call overlap. You can see that in New York and London, they have almost 4 hours trading together before they close. It's 5, so not 4, 5 p.m. Nigeria time. Because of what? Because of the change in the New York time, which it was initially supposed to be -4, right now it's -5. So this is how this market continues to trade every blessed day, 5 days in a week. 5 days in a week. That's how the market continues to trade. I'm not seeing it bold enough. Let me increase it for you. So that is what the market has been doing before we were born, and up to today, we will leave this world if God have not yet come. Jesus tarries. So I use understanding that is the three market that the market operates very well on. And then you discover that at which time that the market normally moves. Me and you know that anything as that early, a lot of people may have not been in the market yet. And that's why you see the market was waiting for the people around 7, even though around 6 it started to make a move, but it could not be able to go any further because it rightly come back almost there. Then you see what it's doing now, which is 10 a.m. right now. Even though today the market is not really moving, but if I could have been in the trade up to this point, I think this could have still been fine because this is about 30 pips. This is 30 pips. So it's a good thing for a new beginner, but these conditions of the market is not what I do not really like. And this can make a lot of people to begin to have anxiety, fear, and greed may step in, and a lot of other things. Why? The market is not going anywhere. Should I go out? Should I stay? Should I act when you want to break? This and that, this and that. So a lot of other contradictory questions may begin to pop up in somebody's mind, and you may end up making a wrong decision if you do not know what is doing in these types of a high resistant market condition. So we have talked about a series of things this morning. We talk about the trend. We talk about the trend. We talk about the time of the market sections opening, and equally we have talked about consolidation. And right now we have talked about Forex factory calendar, which is very, very important for your success in this game. Why I'm giving you all of these stuff before we get into a strategy is simply because remember, we said success is 95% mindset and equally at the same time 5% strategy. the strategy without even these particular terminologies or this particular pre-section or this particular ingredients that are pouring into you, it will not go into work, because it is only those who know where they're going to that they can be able to buy a ticket and go to where they want to go. So the first important thing is to know these things, have them at the back of your mind, take note, and then you must not trade all of the market. And then another thing I want you to pay attention here, and especially in this issue of time, because time is what moves this market, is that if today you book a flight to go to Lagos and you're to be in Abuja airport by 5 a.m. and you will not be able to get there by 5 a.m., will you be able to catch up with the flight you are getting there by 6? The answer is capital no. And there is no way the plane will come back to pick you if they have already taken off. Even when you come, they have closed the window. It takes the grace and the special grace of God for them to consider opening the door for you. Enter. Because one pilot have entered and closed that their door, opening it back for them to open it for one person, if not grace, it's always very difficult. And most of the examples you said with people is trend. If you have ever entered train, I do enter train, go Katuna, go a lot of other places. But I discovered that once you are late, you are late. Whether you see the train moving, you can't catch up again because the train have moved. So time is the key ingredient for success in this market. If you miss the move, if you miss the time the big boys want to take off, the only thing you just have to do is either you forget about it, or you book for another one, or you know where maybe possibly you can go and wait for him, you can go and wait. But the point is that will you run faster than the train? No. So you can wait for another one to come. Or you wait for another time that the trend will take off again. What am I trying to say? This market move based on time. Time is the number one thing that makes the market move. So if you are to trade London section, you should be aware that anything between 7 a.m. to 11 a.m. Nigeria time, you are going to stand still on your system to observe and see whether your position will come. Because anything from 11:30 something, the market has begun to mellow down, waiting and observing to see who are coming for the New York section. So for the New York section, if you are to start and anything between 1, 2, 3, 4, 5, 6, 7, you should begin to understand that the market has begun to mellow down for the Asian section. And that happened to be the close of the day that we have been talking about, close of the candle. The candle by 11 p.m. Nigeria time, which it closed by 10:59. The 11 p.m. is the starting of the Asian section market. So you should be able to have this written down because they are more important than what any other thing you want to do. Okay, this market trade 8 hours, and can I sit down 8 hours? The answer is no. When likely will the market move? You should be able to ask yourself, when likely the business take place? If you want to go and do a transaction of $1 billion in today Nigeria, I believe you will not leave your house by 6. I believe you will not leave your house even by 7. But by 8, you may decide to go. So you discover that by 8, 9, 10, the market begins to move. Why? Because in liquidity, there is money in the market. Oh, this market is being programmed. But they are using the concept and the psychology of thinking pattern of human being, that the market is moved based on supply and demand to move the market with the algorithm. So when you begin to get those things at the back of your mind, then you will know exactly the time you will position yourself on the screen and begin to look for opportunity. Now, let us say there may be delay. Yes, plain delay. The only thing that you do not delay, or the only thing that is always on time, is God. But any other thing that is some factors that may cause a delay. So you see that today the price could not move. This is after 10 now. You see where the price is going, especially for my Euro JPY, that it doesn't move a lot. This market do move a lot. Averagely, I don't take 50 pips a day. If I could have traded this morning, you see what else could have happened. I could have made the money, and maybe if that's my target for the day, I could have closed my laptop and go to do whatever I want to do. But I was sleeping. I'm human. I wake up around 12. I think that maybe I can wait. I could not be able to wait. Seriously, I was seriously tired. I went back to bed. I wake up around 5. I do 1 or 2 things. I have been here right from 5 a.m. up to now. How many hours now? This guy, 5 hours now. I'm still been looking for this, and only 30 tips are produced. But I've taken 20 and I've closed it. Why? Because I see what is doing is not what I want. So if I'm to trade now, I have to wait because I'm out already. I can't enter here now again. I said I want to take, I could have taken this candle. I was watching it, but I say no need. Why? Because why I could have taken it is simply because I have a very simple strategy. If market will not respect these things and still come down to this place, I'm done. Must I be right all the time? No. You doesn't need to be right here to make money. You just have to make money. We're not talking about who's perfect. The only person that is perfect is God. Will you lose? Yes, sometimes you will lose. But you know what you're doing because you have a defined, we talk about stop loss, we talk about take profit,